What's up, guys? Welcome to the F Words with Gordo. I'm Gordo, your host, and today we're talking about finance, specifically insurance. There's a lot of different experts and gurus that tell you from some people pitch the simplest product, some people pitch insanely complicated products, and everything in between. People get really passionate and they talk like to the other group like they're a bunch of morons. And so I just want to dispel some myths in this episode, tell you what we have done, my wife and I, and what makes sense for us, and hopefully help give you some information for you to know this is what makes the most sense for us. And, if you have any questions after the episode, let me know. You can comment on YouTube. You can contact me directly. And at the end of the day, just definitely encourage you to get self-educated so that you can make the best decision. Anyway, hope you guys enjoy the episode. If you don't mind, I would love it if you like and subscribe. It makes a world difference. And thanks so much, guys. Love you. Peace. What's up, guys? Welcome back to the F Words. Today we're talking about finance. Some of you guys might love finance. Some of you might absolutely hate and be totally bored out by it. Finance is one of my favorite things to talk about and learn about because I've always been very interested in money, maybe to a fault sometimes. But you know what? I always liked math. Even when I was a little kid, math just always kind of makes sense. And it was always something that I kind of resonated with more. And so I think that translated into finance the older I got. Like I wanted to figure out, what is this money thing that we have to deal with for our whole lives? And how's investing work? And to, what's funny? I think I like talking about this and learning about this. I think for the longest time, I thought there is just one golden piece of information that well-off people have that I didn't have. If I could learn that piece of information, then I would just be totally set for my whole life. And then I've done things like gotten my master's in business and read book after book after book and made money and lost money. And you just realize there's not one piece of golden information that is like the golden ticket to this stuff. That I think instead it's more like a puzzle, 2,000-piece puzzle, and everything you do adds pieces to it. Sometimes you might do something that adds one little piece to it, and sometimes you might complete a whole, edge section of the puzzle. But it's this puzzle that you just continuously are adding to. And I think over time you look back and you're like, oh, I can tell those pictures. This is a donkey. This is a puzzle of a donkey. Sorry, it's funny because that's a scene from The Simpsons. Anyway, and so that's why I like talking about it and learning about it. And I think too, the more we talk about this, I think, and I need to caveat that, the more we honestly talk about finance, the better we all end up being because we can share this collective knowledge. I know there's maybe generations or people who think that sharing this information is rude. It's rude to share what you have, what they don't have, which is fair. I guess maybe it comes down to if someone wants to know or learn something or not. At the end of the day, you can't force someone to believe what you believe about finance and money. Which is fair. We're all on kind of our own freaking journey about this stuff, come from different places. And as long as we're all kind of moving in the same upward direction, then it's probably okay. But, yeah. And I think it seems like it's more important to be truthful and a bit more honest and a bit more open about all this stuff and how it works. Like disclosure. It's funny because I think in a lot of instances, I think privacy and discretion is the best policy. And then in other instances, I think disclosure is the best policy. Maybe it's just my subjective preference depending on the subject matter. But at the end of the day, I think this is an area that it does make the most sense. Because sometimes you look at someone and you're like, oh man, this person's got it totally absolutely made, and then you kind of dig a bit and you're like, oh, this person's no farther ahead than I am, right? Like we drive a couple of aged used vehicles, and I think sometimes when I see someone driving with a nice new vehicle, especially like a nice new Forerunner or something, I'm like, ah, oh, they made it. They've done something right. I've done something wrong. And it's not true. Like our one vehicle that we have is a 2010 Dodge Caravan with 279,000 kilometers that we bought for 3,300 back in 2020. And when you like break down the math of our purchase price, we've had it for like 5 years, so it's 60 months, $3,300. I'm just gonna 3,300. That's 330 for every 6 months. So 330 divided by 6 is like 50 and change, $55 if I'm doing my math right, which I think I am. So $55 per month. Now we front loaded it, but the longer we have the vehicle, the more it drops like our monthly costs. Because I think a lot of people have car payments of like $4, $5, $6, $7, $8, $900 a month, and it seems to be if you get a vehicle with over 100,000 K with moderate features, that seems to be the best way to like lower your vehicle costs. Anyway, then you find out someone's like leasing their vehicle for $900 a month, and you're like, oh well, you know what? If having this vehicle is affording my wife and I the ability to invest in RESP and invest for ourselves, then it's like a huge win-win. Plus, you know what's crazy too? This is such a rabbit trail. Every time I clean my car and like clean it nicely on the inside and detail it, I'm like, I get in afterwards. I'm like, oh wow, this feels so nice. And I think like just having a new, sorry, a clean vehicle can make all the world with these perception issues. Probably seen with our homes too. Like I think sometimes we think, oh, if I just owned my home like that person, I'd be so much more happy or fulfilled or satisfied with how I'm getting ahead. But then you find out, like we talked to our friends the other day, they have friends that own a detached house. They had some kind of water line issue under the driveway that had to get repaired. It cost them $50,000. And I think home ownership, man, this isn't even what I talk about today. I want to talk about finance, but I want to talk about other stuff. But I think home ownership is just it's tricky. I don't personally, I'm not really interested in owning properties for investments because I think tenanting, I know some people have made tons of money, made their fortunes off real estate, so totally fair. Excuse me. But the idea of like tenanting, handling tenants is we rented it. We had an apartment for a while. We rented it out after we moved out, had a totally great experience. But it was just luck of the draw, and if you have a large enough portfolio, then you can calculate the risk of having the odd bad tenant. If you only have one property and you get a bad tenant, then it can set you back. It can more than set you back the appreciation you're getting on that property. So anyway, I think home ownership is idolized often in our society. I think what the point I was going to make is like, you know what, if we rent a place and if we keep it clean and we do little things like change the orientation of rooms and maybe are intentional with the goods we're bringing into it, I think you can make it feel a surprisingly like fulfilling place to be. And just because someone else owns where they are, first off, doesn't mean they're getting more ahead of you. Second off, doesn't mean they're happier than you. Third off, doesn't mean they're more fulfilled than you. Fourth off, doesn't really mean anything. Often, these like situational things come down to context and being objective about the context we're in, they're in, and whatever. Because I think sometimes we get kind of half truths about where people are at, and the half truths can make us feel crappy. And it's not really fair to ourselves to let ourselves feel like crap because of a half truth from someone else. Anyway, so there's so much more I could talk, and I want to talk about budgeting another episode. But today I want to talk about insurance, because insurance is a hugely there's so many types of insurance. Insurance is just like, what is it even? Insurance? Insurance is the process of transferring risk to another party or another entity. So in the case of like your vehicle, you have to get like the basic insurance, I guess, to just be able to drive your vehicle. But you get collision because if you crash into something, you want the insurance company to pay for it for you, the repair, not yourself. You get life insurance so that if you pass away at some point, your family gets a sum of money that they can use in your absence. There's home insurance, kind of same thing as car insurance. So there's tons of different types of insurance. But what I find the most confusing is like, yeah, personal insurances like life insurance, critical illness insurance, disability insurance. There's so many different kind of categories of insurance. And then within those categories, there's different models almost. So, and I've spent like a lot of time in the last year and a half trying to figure out what's our family's current insurance situation, what's our upcoming situation, and what should our reality be? Well, especially today, because I was working on this over the last year and a half. And you know what sucks is we worked with an insurance broker who sold us a couple products that I think were the right products, were right at the time, but we've had a pretty crappy experience with him, and it really left like a lot of distrust around the products we have and how the stuff all works. Cause I think there's a long time where I took everything he said as like gold. Like we bonded over different things in our lives, like our faith. And there's been some really big character concerns that have kind of seeped into these other things like our insurance products and made me go like, are these the right products for us? So I've gone on this whole rabbit trail, and this goes back, and this like including reading books and what some books say to do and not do. So, and when it comes to these types of insurance, you get people like Dave Ramsey, probably the most famous person who discusses things like life insurance and critical illness insurance. And he's like vehement that whole insurance. I should probably even qualify that. Whole insurance is, yeah, how do I even like start this? So I'll just start with life insurance. Life insurance you buy, so if you die, your family gets a sum of money that they can use in your absence to take care of themselves. Now there's term life insurance, which is it's insurance that you buy for a certain term, like 10 years. And then if you don't die in those 10 years, you don't get anything. You don't get your money back from your premiums. You don't get any kind of payout, nothing. And you can go term 10, you can go term 20, I think some companies do 35-year terms you can get. And then some people say you should just kind of go on 10-year terms from one to the next, because as you accumulate assets and investments, your need for insurance goes down, for life insurance goes down, because if you pass away, your family has these assets that they can manage and use to get by in your absence. Other people are like, get the longest amount of insurance you can get at your youngest point because it's going to be the cheapest you can get it. And, for instance, my wife and I are on 10-year term insurance right now that we got 7 years ago, and we got it for 10 times what our income was back then. Now, 7 years have gone by. We haven't accumulated the same number of assets I thought we were going to in this time. And now we have a son, and we're hoping to have a larger family. So now I'm kind of sitting here thinking like, okay, well, how do we make sure we're secure and safe for the term of our children living at home? That's kind of like my perspective right now. And it seems like, if we're not done having, I think if you're done having children and your children are young, to get a term 20 insurance policy kind of makes the most sense, because you're just taking care of, your family is taken care of the whole time your kids are at home, because your needs are going to drastically change when your last kid graduates high school. Now, we're not done having kids and we want to have multiple kids still. So if I got a 20-year term policy right now, here's the problem we're in. I have a 10-year term policy that's going to expire. And that current policy isn't the right value for us because our income has changed. 7 years ago it was for 10 times our income, or I think 12 at that point. And now our income has drastically changed and we're probably underserved, underserved. I can't remember the term, but we're probably below what we need to be. And I'm also like, okay, so I know we're undercovered right now, and I might need to consider more than 20 years. So I'm like, oh, do I get a 30-year policy? Well, at the end, the last few years of the 30-year policy, I'm going to be substantially closer to dying, practically speaking. And so going from like a term 20 to a term 30 really drives up the cost, but it's also a lot of peace of mind thinking that, but we'll have like this 30-year package. Like if I were to pass away or my wife were to pass away, we get this substantial sum of money that we could, our household should be fine, or at least it would just be like a huge, not opportunity or gift, but like a huge, calming factor. I'm having a hard time with my words these days. It'd be a huge, what's the term? It would just give a lot of peace of mind, right? Like knowing, okay, if one of us were to pass away, hopefully not, or both of us, that there'd be all this money that, if invested right, should replace the income that we would produce by living and working instead. And yeah, it's kind of what I'm leaning towards. Now, yeah, going back to Dave Ramsey, he often talks about insurance, life insurance, and he says you should only buy term insurance. He says whole life is a waste of money. And whole life insurance, interestingly, is a policy that covers you until you die, like your whole life. It's like guaranteed. And so it's usually a much smaller payout and a much higher premium because you're guaranteed to die at some point. So they're guaranteed to pay it out. And so they're taking a risk that, this is the insurance industry is all about analysis and balancing the odds of different people groups passing away at some point, right? And so for whole life insurance, you could sign someone up for it. And this is true of I guess any of these insurance policies. Term insurance only makes sense for them because they're hoping that the majority of people that buy term insurance don't die while they have it. Because if everyone died while they had term insurance, they would go bankrupt. Like when I was looking at term 30 insurance, the total lifetime premiums we would pay would be 3% of the total payout. And that's going until my 60s, like past 65. And I thought like, man, that kind of seems like a bargain, knowing that we would like only pay that much for that potential payout. But yeah, and then with whole, it's the opposite, where it's like they know they have to pay it out. So they're hoping that they can recoup the premiums and invest them substantially over your lifetime before they have to pay out that payout. And I was like, man, there's so many people that say whole life insurance is really good product and important. And so I started studying and looking into these different terms and types. And so this is where like the question for you when it comes to insurance, because I'm not going to tell you what you should do or not do. I'm not a financial advisor. I hardly know this stuff enough to know what we should do. But it does come down to I think if anyone were to be like, oh, you need to get this product instead of this one, I think is just like sketchy. That's a huge red flag for me. Like they know automatically what you should do or shouldn't do. And they're telling you without asking a lot of questions first feels really sketchy. Now where it gets tricky is and there's differences in the US and Canada, but there's some insurance, programs that you pay the premiums and you can actually pay more than the scheduled premium. And then when you pay more, you can basically invest it or buy options on stocks with it. And then the crazy thing is you can buy options and set your options for that year. And some people make huge amount of money by somehow buying options within life insurance policies. And, you know, just seems like wild. So I think that, and this is where it gets complicated. Now, it also, I think, where the question for any of us is, what type of insurance do I need? It does come down to like, how much money am I making? What's our lifestyle? What's our like monthly budget for our household? Because we should have certain means and living within those means. And, you know, it kind of just comes down to math at that point, determining like, okay, like if I were to pass away, you basically need 10 times that so you can invest that money. And if you invest it in a low risk, well diversified fund, you should get about 10% per year. So if you get 10 times what you make now and you invest that and you get 1/10, you get 10% back, you basically replace the income that you would have made for that year. No investment returns are guaranteed, and some years you lose money, but that's the practical idea behind it. Now, I think like, yeah, where you get lost in the weeds is you get like life insurance, critical illness, disability, and then, you know, with life, you have term, you have whole life, you have universal life insurance, which I'm still learning how that works. And then kind of same with critical. And so for us, we have term 10 life insurance and we have whole critical illness insurance with a return of premium policy built into it. So what happens is we pay quite a bit of money per month for a decent payout if we were to have a critical illness at any point in our lives. But after 15 years, we can cancel the policy and get all of our premiums back. And it's kind of interesting because, like I said earlier, I was kind of been weighing, like, are these right products for us and our needs being met, or were these sold to us because the person selling them just wanted the big commission, whatever. And I found out one of our good friends, basically the exact same plan, and that our friend wasn't sure. She was herself an insurance agent and transitioned to a different career now, but she got these plans for her and her husband. And I was like, whoa, we have the same ones. You have to tell me why you have these the way you have them, because I am having some existential crisis based on basically a falling out with the person that sold them to us, you know? And so we had a good conversation, and basically it's kind of like I said, term insurance is way cheaper than whole insurance. And they just renewed. They just locked in a 20-year term insurance policy, which makes sense because they have 2 young children, and I have no idea if they're going to have more kids or not. But you know, so if they just have the 2 kids, then they're covered until quite a bit after the kids are out of the house. So that's amazing. And they have whole critical illness insurance. I can't remember why she said they had that exactly. I guess like just like good peace of mind, because critical illnesses suck. You know, if you get cancer or, you know, a long list of really substantial illnesses, to get a payout that can cover lost wages or be invested and help supplement stuff is like quite smart. Critical illness is like really smart to have often. And this is where what's funny too is at our jobs, you often get like coverages for these as well. You usually are covered for your life insurance for 1 year of your salary. And then there's usually critical illness built in. There's usually long-term disability. Long-term disability is really important too, because stuff happens, man. Like stuff happens at work and stuff happens outside of work. And if you can't work, the government here in Canada will cover some on long-term disability, but not all of what you're making. And so to get a different long-term disability insurance, usually the cheapest, from what I understand, the way cheapest way to do it is to go through your employer. If your employer offers it, go through them and get 65 to 70%, because I believe it's not taxed. And after taxes, you make like 60 to 65% of your hourly rate or whatever of your salary. So if you have non-taxed, 70%, then you actually might take home more money. And apparently it can be really expensive on your own, but when you're in a group policy at a workplace, it drives the cost way down. So for us, life insurance is the biggest thing. Life insurance is the most important thing, because I don't know you personally, but if you have ever seen a parent of a young family, it sucks anytime people die. It's just especially tragic when a person young in life passes away and they leave behind a wife or a wife and kids, or vice versa. It's important opposite too, because like obviously if the mom is working, that income has to be replaced. If the mom is not working, there's usually going to be additional costs for the kids to be taken care of, logistics. And so to have some kind of policy on the stay-at-home parent, if there is one, is often super, super important. Now, yeah, and so they're like the big three: life insurance, critical illness, long-term disability. Long-term disability should be covered by your employer. If it's not, always good to talk to a broker and see who. So that's what we have. We just are covered by my employer with my benefits. I do get critical illness through my workplace, and then we have our whole critical illness insurance that we're just covered for life. And then if we want to just cancel that because we're a bit later, we paid these premiums into it, our premiums get returned. So those premiums haven't been invested, but it's kind of like a forced savings account, I guess. And then when it comes to insurance, you just want to make sure you're covered. Now, I don't believe anyone recommends, and I might be wrong, but I don't think anyone recommends whole life insurance instead of term insurance. From what I've seen, I think everyone recommends term insurance because it's cheap, but it's only for a period of time. And when whole life insurance makes the most sense is if you have an estate that has a large sum of assets and your death is going to trigger a massive capital gains tax event when it's passed to your kids. So for example, if you own a home that you live in, and maybe, you know what, I might be wrong on this, so I'm just going to say how I understand it. I believe if you live in your home that you own and you pass away, pass to your kids, there's no capital gains. However, if you have a second property, like a vacation property or a rental property, and that just transfers to your kids, then the government wants a piece of that. They want their cut, as if it's being sold to a new person, and they want their capital gains. So people will get a whole life insurance policy knowing like, all right, like I have this many assets now. Hopefully it'll appreciate to around here. I don't want my family or my estate to be forced to sell this asset or these assets because they can't pay the taxes. So I'm going to get a whole life insurance policy to make sure that when I pass away, that additional money comes into my estate, and that can cover the capital gains on my vacation home or my rental homes, maybe on my primary residence. Again, I'm not sure how that works, but that's like the biggest reason I understand why people get whole insurance, is because of taxes. I don't know. And maybe you're listening to this and you're a financial advisor and you're like, this guy does not understand it. But you know what I'm finding? I'm finding with finance, the simplest answer makes the most sense. And maybe that's why like I'm not rich. Like maybe some of you are, but the more I read and the more stuff I look into and the more stuff I hear, there's times where I've been spoken to and left confused, and I accept the advice. I think there's been times where I hear where I hear complicated words explaining something, I don't fully understand it. And I assume, oh, I don't understand this. Therefore, it's complicated. Therefore, it takes a high degree of expertise to understand. Therefore, it's right. But now I'm kind of leaning the opposite, where I think the simplest answer is the best answer. And there's even some people, I saw a new guy the other day criticizing Dave Ramsey. His name is Doug. Shoot. I think it's Doug Armstrong. He's from the US and he talks about a laser fund. And basically, what he advocates for people, instead of investing in stocks, he recommends buying a very specific life insurance policy that you can, I think it's it must be a whole life policy that you can overfund. And this is hard too, because I think Canada has many different rules than the US over this, but it's laser, and laser stands for something. And you overfund the policy, and with the overfunded funds, you can again buy options against stocks. And some people apparently make huge gains that are then tax free somehow, I think, because you can borrow against it. But again, this is where these things become complicated, and it's hard because every time you leverage, like if you're borrowing money, the hard part is when you borrow money to do something, it heavily complicates the risk reward payoff. So, you can borrow money. I guess with a life insurance fund, you're funding with your own funds though. But I guess what I'm thinking right now is you're leveraging a life insurance policy that's meant to pay you out when you die, and to find these narrow breadths. Oh, no, this is what I was going to say. So you build up a value in the life insurance policy that you borrow against. Because, it's always the argument of rich people is they'll have $1 billion stock portfolio. And instead of selling the stocks to, live their lives, and pay taxes on them, they borrow money against the stocks. They take that borrowed money, they buy homes or some other kind of cash flowing asset, and then they use that cash flow to pay off the borrowed funds, and that's how they keep accumulating wealth. But every time you leverage money, you just are like exponentially you're exponentially complicating the risk reward ratio. And that's where the more I read, the more I look into this stuff, the more I hear people, and this is what frustrates me too, is people talk like you're an idiot. And even Dave Ramsey does this. I think Dave Ramsey does it because he really wants to guide people in a specific direction that he thinks is best. I think, because I don't think he sells insurance. I think he has preferred vendors for things, but I don't think he sells it himself. But I still kind of feel like, I don't know. I think like the simplest answer is probably the right one. I think maybe if you have a really complicated asset list, then you need a more complicated life insurance plan, mixing term and whole insurances or something. But I still feel like the simplest path makes the most sense. There's a time where I was like dead set on being like this huge, landlord and owning tons of properties. And now I'm like the opposite. I'm like, I think having a huge stock portfolio that's highly diversified. So that's diversified across different markets and diversified across regions. So there was a time where I was just buying stocks in the S&P 500 because it's 500 stocks. But then I looked into it, and those 500 stocks are not weighed equally in the fund that I was buying. I think Apple was 10% of it. And I was like, I don't want I don't want 10% of my net worth tied up in one stock. And so I've been switching to a different one that does the whole US market. does Canada and international markets. So it's like maybe Apple might be 1% of that, but yeah, it's where it's like you think you're diversifying, but you have to know the underlying assets of these funds you're buying into sometimes. Anyway, but the point being, like, simplest I think is best. The simplest insurance is to have adequate long-term disability insurance, is to have some kind of critical illness insurance, whether it's through your workplace or on your own, that pays out if you get sick, and then to have life insurance, probably term insurance. If you're, because if you're like that here, and here's the thing too, right? Like if you, because I think what I'm going to try to do, I'll talk about this more in another podcast, is I want a sizable stock portfolio, and I want to own the property I live in. Because ideally one day we would own where we live, and eventually you pay off the mortgage. And so that drives down your month to month cost at that point. And so if that's what we have when we leave behind for our kids, if we can transfer our primary residence tax free, then I mean, likely they would sell it and split it between them if we have multiple kids. And then the stock portfolio, there'd be some kind of capital gain. So they would maybe just have to sell a portion to get cash flush to like pay off the capital gains of transferring that portfolio. So you don't really need a whole insurance policy in that case, because you only need a whole insurance policy if there's some kind of asset like that you can't partially liquidate. Like for instance, if you have a cabin somewhere, like a secondary vacation home, you can't sell part of that home to pay the tax bill to transfer it. So that's when you have whole life insurance to do that. Again, I mean, if you're diversifying, you should have a sizable stock portfolio as well as a secondary like residence like that. But this is kind of just demonstrating how complicated this stuff gets, and how you have to sit down and be like, here's where we are now. And this is what I will advocate. If you're a married person, please get life insurance, and not just life insurance through your employer. Get insurance that covers 10 times your income minimum for whatever. If you want to just do 10 years for now, whatever. But if you have, please do that. Please do that, because accidents friggin' happen, and you never know. Because here's the thing. We think like, oh, I'm a safe driver, I'll never crash into anyone. That it's not like necessarily ourselves we have to worry about. It's the drunk driver who's texting that we have to worry about. And there's things just outside of our control that we have to worry about. So please, if you're married, and especially if you have a family, get life insurance today. You can, if you comment on my video, because I don't get a lot of comments, and you're like, oh my gosh, I need help figuring this out, I'll refer you to a couple websites. I might even just put a website in here that is some kind of like generalized database that will just get you prices, and you can just pick it yourself. But please, please, please get life insurance for 10 times your income this week as soon as possible. And then the second thing is make sure you have good long-term disability insurance. Find out what your workplace provides. And then if it's 50%, find out a way to get the next 15, so you can get up to 65% covered. My workplace, we're able to choose. So your standard, you have to do 50%. But if you want more, you can go up to 70%, and then they just charge you extra per month. So I just upped mine when we had our son, and that's taken care of. But if I was to quit or leave or whatever, then I would have to go about finding it privately and ensuring we're covered in case something were to happen. Anyway, so those are the big three: life insurance, critical illness insurance, long-term disability insurance. And get your life insurance figured out today. And if you have life insurance and it's the other ones, honestly, just like do some research. ChatGPT is honestly probably one of the best objective. Is it objective? Probably not. But it's a nice sounding board to be able to bounce these ideas off of. And there's a really good book by Dave Ramsey. I did appreciate his book. It was called, I can't remember, Money, something about money. So read, maybe I'll reference that in the description. Because I found his explanation. It's one thing to see his like short videos when he's trashing stuff. It's another thing for him to read his book and see him explain why he believes in some of the products that he does. Big difference. And then he talks about other cool stuff like here's how you can negotiate better for vehicles that you want to buy, and helps you. And like he breaks down why leasing is the most expensive way to own a vehicle, acquire, and why buying cash is always the cheapest. And so, yeah, that's like the thing today. And here's what I'll say too, a caveat too. You don't need, like, here's the thing. Any broker who sells life insurance is going to make a commission on the product they sell you. And maybe they're not motivated to get you the product that pays them the highest commission, but you don't ever fully know. Like your best friend, your father could be a life insurance salesman, and they could advocate strongly that you should get this insurance product, and you just don't fully know. Thankfully, there's websites where you can get a bunch of, you can basically broker your own life insurance these days. Someone might still get the commission, but this is why it's like you have to be a bit like self-educated, because you have to know, I think it's really important to know why you're getting what you're getting. At minimum, like if you don't get critical illness and you have minimum long-term disability or whatever, at least get life insurance. If you're single, like here's the thing. If you're single, it kind of like doesn't necessarily matter. Even if you own a bunch of assets, if you're single and they're just being passed to maybe someone or a few family members or friends or something, like they're probably just going to sell the secondary properties or whatever. Like you don't have to worry about life insurance as much. But if you're married and you have a family, just super, super important. Please get life insurance today. So that's the only thing like I'll leave you with. Please understand the need for having life insurance and go out and find some. If you don't understand whole insurance, don't touch it. If you don't understand universal insurance, don't touch it. If you don't understand even what critical illness insurance is, like don't touch it. Like it's important because I think where if you just Google like whole life insurance, you're going to have one person yelling at you on YouTube, like, this is the worst product in the world. Don't get it. They're scamming you. And you'll have someone be like, this is the most important product in the world. Don't listen to Dave Ramsey. It'll build the wealth for your family and stuff. So it kind of just comes down to like self-education and making sure you understand what you're getting. If you don't, at minimum, if you just don't understand something, just don't get it. Just make sure, like, term insurance is really easy to understand. You pay every month to get protection that if you die for the term of that product, then your family receives a giant lump sum of money that should be roughly 10 times your annual income. So that's term insurance. If you understand still, talk to ChatGPT and just like understand it, because then you can go and get a product that makes sense for you and your family. So that's what I want to talk about today. I'm going to talk about a couple more finance things next couple of weeks. I want to talk about wills and why they're important. I want to talk about budgeting and why it's important. But this is insurance. And if you have questions, comment it on my YouTube. If you know me, you guys might know me directly. Reach out. I'm happy to talk about this stuff anytime. And if you have good questions, then those might inform future episodes, which I would love to do. So anyway, hope this makes sense. Hope you have a bit more context around personal insurance, and hope you got pointed towards some products that make sense for you and your family. I'm not advising you to do anything except have something. Anyway, guys, love you. Thanks for always checking in. Please like and subscribe. It means a ton. And we'll catch you next time.